Welcome to the Introduction to Depository Institutions unit, our banking unit, which is our next unit. Before we start the presentation, I'm going to click in Moodle, go under Banking, which is Unit 2, and show you this agree or disagree. Now I'll be going through the PowerPoint, but here is an agree or disagree worksheet that you don't need to fill out, but you can just look at and see if you agree or disagree with it. So a bank can help me positively manage my money. Right now you can say if you agree or disagree with that. You can do thumbs up or thumbs down. I trust that my money is safe if I store it in a bank. Agree or disagree. And my money has the possibility to increase in value if stored at a bank. Agree or disagree. So just think about those beforehand. Kind of, you can mark them down. You don't have to save them. But that will kind of get us in the mindset for what we're going to be doing for this presentation. So in this presentation, the note-taking guide is next in Moodle. And in the note-taking guide, again, you can print it or you can save it so that you can edit it however you'd like to do that, whether that's in Google Doc or using another form of PDF editor, whatever you think will be best for you. So it's only 2 pages long. I printed off for my classes in school, but you are not. So let's get started. Introduction to Depository Institutions. What are depository institutions? They are a business that provides financial services. So a bank, a credit union, those are examples of depository institutions. You can probably think of some that are in our community, maybe one that you currently are a member of. So Josie is going to be our person we're going to be using throughout this activity, this presentation. She's a senior in high school. She's been accepted to a university 3 hours from home. She's making important decisions about her future, especially regarding money, and she's looking for a safe place to store her money and pay her bills while at college. So we're going to help her manage her money by choosing a depository institution. She found 2 in her hometown that also have branches near her college, and she has summarized their information on the Josie's Depository Institution comparison chart. So we're going to help her learn more about those institutions to help her make the best choice. So before we go to slide 5 and go to that part in Moodle, I'll click back for my note-taking guide now. And her comparison chart is right here. And we'll be using this throughout this presentation. So here's Depository Institution 1, Depository Institution 2, and all different features that they have. And we will be comparing them throughout our presentation. So I'll minimize this for now. Okay, so 2 types of depository institutions that we'll be talking about are commercial banks and credit unions. Commercial banks are for-profit. They are open to anyone who wants to utilize a depository institution, offer numerous financial services, and they're usually the largest depository institutions. Credit unions are not for profit. They're owned by their members. They have membership qualifications. So to be a member, you might have to live in a certain area, work in a certain area. A lot of times they're geographically limited, but they can be different. And they offer many services, but usually not as many as a bank. And they are often able to pay higher interest rates and charge lower fees. So those are kind of the differences. Remember, you can pause this video at any point to add anything to your notes that you need to know. Each type is unique and you need to choose what's best for you. And it's very common that people choose what they've grown up with. So their parents chose a bank or a credit union, they often choose that. But it's totally your choice. So Josie, what type of depository institution has she chosen? Is option 1 a bank or a credit union? And it is a bank. If you look at the choices, because it's open to anyone, and you'll find that. I can show it to you. So in here it says account holder requirements is none, and that gives it away that it is a bank. In this one, Depository Institution 2, it says must be an employee or related to an employee, and that gives us the clue that it is a credit union. So back to our presentation. Option 1 is a bank because it's open to anyone, and option 2 is a credit union because it has membership requirements. Location can be an important factor when choosing a depository institution. Is it a physical location or only online? Are there multiple locations or just one? Are there locations all across the United States or only in your state or city, town? And do you have transportation to get to a location? So does the depository institution identified in your community have more than one location or branch? So think about the different banks and credit unions we have right in town, just quite a few. Do they have more than one location and branch? Many of them do, possibly all of them. Depends which ones you're thinking of. So Josie, how did location influence Josie's selection of her top 2 depository institutions? She has told us she selected locations in her hometown and near her college, so that she has a branch in both. Depository institutions keep your money safe. They offer a safe and secure place to store your money. They have safes and secure networks. They have insurance. And insurance is FDIC and NCUA, if you've heard those terms before. What those terms mean is the FDIC insures banks and other institutions besides credit unions for $250,000 per depositor per insured institution for each account ownership type. So that is a lot of insurance backing that if something would happen, you would get your money back. Credit union, NCUA, insures credit unions the same way as the FDIC, the same amount per everything that they had said. So how can insurance play a role in choosing a depository institution? You'll definitely want to check to make sure your bank or credit union is FDIC or NCUA insured, and most are, but it's something you want to check. It's usually at the bottom of their website. You can always ask as well. So Josie, while watching the news today, Josie saw that a local depository institution is closing. Now that she understands the importance of depository institution insurance, she wants to ensure her choices are insured. So are her choices insured? Option 1 and option 2. We can go check that out in our handout. So are Josie's choices insured? If you look on the chart and look to the very bottom, insurance provided and deposits, her option 1 is deposits are $250,000 per depositor per account is covered by the FDIC, and the second one, same thing, covered by the NCUA. So both are insured, both choices. First one is a bank, second one is a credit union because of the insurance choices. So when we look back at our presentation, yes, both of her choices are insured, so her money will stay safe. So moving onward. Businesses offer services to the public. All of these different businesses offer more than just one service. A grocery store, not only can you buy food, but they have bakeries and meat sections. They have restrooms. They have tot spots. They have all kinds of things that provide services to you. Gas stations, you don't just get gas. You can buy food. You can fill up your tires. There might be a car wash. So these are all services that businesses offer, and banks and credit unions do the same thing. What services do banks and credit unions offer? They offer things such as savings tools, credit, financial advice, safe deposit boxes, and special needs payment instruments, and we'll get into each of those next. So, the ability to earn interest. The definition for interest is the price paid for using someone else's money. You can earn interest or be charged interest. The amount of interest earned or charged is determined by the interest rate, which is the percentage rate used to calculate interest, usually an annual rate. So, example, $100 deposited in an account earning 2% interest would equal $2, and we want high interest rates when earning interest, and we want low interest rates when paying interest. So now looking at our savings tools, they are accounts to help you manage your money. They may or may not earn interest. And the 2 most common accounts are checking accounts and savings accounts. And we will break these 2 down and talk more about these in the next section of this presentation.